Hello, One Talk. Welcome to the Unicorn Emprise podcast, the podcast for PNG entrepreneurs earning between 0 to 1 million Kina plus in revenue, who want to have financial clarity, business structure, and tax confidence. I'm your host, Vanessa Geita, a registered public accountant trading as Hello Taxman, CPA, and content creator in PNG. In this episode, I want to share 5 financial management principles from the Netflix series Mad Unicorn. I finished watching this 7-part series in Netflix over the weekend. Man, this show took you on an emotional ride, up and down, round and round. It had me crying, shouting in anger, cheering in happiness, dancing. I was so emotionally invested. Now, I'm not going to ruin the show and give you spoilers. I'm just going to go straight into those 5 money gems that I took out from the show. You can go and watch it yourself sometime. I highly recommend it. In this episode, I will cover those 5 money principles in the context of our podcast promise. I will focus it on how it brings business structure, financial clarity, and tax confidence in our situation of us earning 0 to 1 million Kina in revenue in PNG. And this is based on my personal experience as an entrepreneur myself in that revenue range and having served One Talks in the same revenue range over the past 7 years. Ready? Let's go. The first financial management principle in the show was that they had a CFO, Chief Financial Officer. This gives business structure. The CFO holds the leadership team accountable to the vision and the mission of the business in the show. By principle, that's what you want the CFO in the business to do. Now, we all have money dreams. People throw out this thing called financial freedom. But if you have no accountability, so in business, that means you're not doing accounting on a monthly, timely basis, then you have no proof of the progress towards this financial freedom or whatever cash flow projection that you have going on. You don't know if you're on the path towards profit if you're not tracking your expenses as well. And this is the CFO's job. Now, of course, typically the people from 0 to maybe 500 or maybe even 750K that I've dealt with over the past 7 years don't have a leadership team. It's a one person, one man, one woman game going on. Regardless of that, you and me, I am a one-woman show for now. Regardless of that, we wear the hats, okay? In the series, there's 3 people in the leadership team. So you have the CEO, who is the star of the show, and then you have the CFO and the COO, the Chief Operating Officer. These are 3 hats that we should be wearing, even as an individual. But the mistake that I see in the SMEs that I've met is that the one person, the leader, is the COO. You become the operator in your business and you kind of abandon that CEO role and the CFO role. And that's where the business structure falls. And then we fail to move through to the next level when we fail to become a CFO and a CEO who can take the business to the next level. That was gem number 1. The second principle in the show was that the CFO reminded the CEO and the COO that 80% of businesses failed due to finances. Like that was her pitch to them when she was asking for the role. This is a statistic that is common broadly, generally. I don't know in PNG what that particular statistic is, but it's high, okay? So like just imagine how we compare. In the show, they were aiming for unicorn status, so they were seeking funding, like investor funding. Then they had to manage the funds to operate this huge, massive operation. So they had to get an investor to afford the warehouse because they were doing logistics to process parcels. They were the delivery service in Thailand. They needed staff, vehicles, all that kind of thing. So they needed a whole heap of capital to start. Now, typically, the people that I've met over the years, we start from scratch. Like it's our own money that we put in. Or if you did sell something, it's that money from your sales that you manage to run the business. But the main problem is this problem of no financial clarity. This lack of financial clarity is usually rooted in the fact that there is no accounting going on in the business. So the owner doesn't know where the business is going. They know they're making money, but they don't understand the expenses, where the money is going out and how it's going out. There's no pattern that they recognize and understand and have managed. So they get stuck and they can't grow. They can't pay for help. They're just stuck there. The other problem is I get a lot of inquiries from new or first-time business owners that ask me to help them to get a loan. That's not a service that I offer as yet. And it always made me curious, like, why are these people gunning for loans straight out like that? When we start from scratch, the first place that we get funding from is from the sales. So if you have a problem making sales and then managing that money from the sales to run the business, then what are the chances that when you get capital funding, you're going to manage it well? If you can't manage a small amount of money, then what are the chances that you can manage and handle a larger amount of money for the business success? Anyway, that's just food for thought. I'm just going to put it out there. So yeah, that was lesson number 2, that the CFO reminded the leadership team that 80% of businesses fail due to finances. In our context, this would mean financial management. Now, this isn't a principle, it is a statistic, but the principle behind that is that managing money is important for the success of the business, like duh. The problem that I see a lot of PNG SMEs, the formal ones that is that we're still in the informal mindset. You still got table market mindset after you've registered this business with the IPA and the IRC. The result of this is that a lot of the sales money gets used for personal stuff over the business stuff. Like you want to make it to the next income level or profit level, but because of a lack of financial management, you do not know if you're making profit holistically. You can be making profit on the product itself, but overall in your business, taking into account every single expense that it takes to run your business, there's no financial clarity because there's no accounting going on. And so the business fails due to a lack of financial clarity. And it keeps repeating this cycle. Yeah, you get up, you make some more money selling something, and then it fails again. And over and over it goes. And we don't break out into the next phase of earning a bit more money to manage bigger business operation. This leads on to the principle number 3. In the show, the CFO kept her personal life out of the business operations. This could go without saying, but in the story, the CFO was a woman. She had family debt to deal with. She had her romantic commitments and temptations and all of that. But she managed to put the business vision and mission above all of that by the end of the show. And that is where a lot of us, the SMEs, the entrepreneurs, informal business earning between 0 to 1 million Kina, we fail right there. There are so many excuses that we give ourselves to spend business money on personal stuff that we let the business down. And when we let the business down, the business can't provide for our personal lives because we've killed it by taking all of its earnings and spending it on personal priorities over the business mission and vision. One of the most common ways that I've seen this manifest in real life is that you use your business card for your grocery shopping. I'm not saying that you can't shop and live off your money. I am saying that in business, this is usually structured through a payout to you as a salary so that you can do those kind of things on a regular basis. So, as the CFO of your business, it is your responsibility to manage and structure the personal versus business expenses that happen in your operations. This takes us on to the financial principle number 4. In the show, the CFO had put aside emergency savings. This brings us back to the favorite topic of many of the financial literacy programs out there today in PNG about developing, sustaining, maintaining a savings culture in our lives. You as the entrepreneur, the leader, you as the business operator for your business, you want to be managing your money in a way that you can maintain an emergency savings. In my 7 or so years of helping SMEs, I've seen that this lacks in most of them. There are few clients that do this, not as structured as could be, but it happens for some, but it doesn't happen for most of the owners that I've come across. Even myself, I must admit, but now at this 4th year, I have reached the point that I can start putting aside some money for savings. I wouldn't call it emergency savings yet, but there is a savings there. Now, the main issue that I've seen across many of the SMEs that I've come across is there is no tax savings that is separate from emergency savings. Now, what we want to be doing is to be putting aside money for taxes regularly because taxes can be calculated. It is not a mysterious number. Like emergency savings are like it's mystery, like something could happen. And so you'd have this fund sitting there to cover your business operational costs when an emergency does happen in your life. But taxes should never ever be an emergency. This is something that can be calculated, set aside, and paid for on a regular basis. Yes, that is your job as a business owner in a formal business entity with the CFO hat on. Now, okay, that was like kind of harsh, eh? But anyway, this is the podcast where you do gain financial clarity, business structure, and tax confidence. So this principle, number 4, is around that tax confidence value. And finally, we come to the final financial management lesson from the Mad Unicorn show. The CFO was the most trusted person on the team to bring them across to the unicorn status line. This made me question myself personally. Why is it that they were able to build a team, a winning leadership team like that? Over the years that I've worked with PNG SMEs, informal business, I've realized that the individuals earning between 0 to 250K, they get stuck at building a team. And this is where I am personally as well. In the part about building a team, I have started, but it comes to all of these challenges of how to hire, who to hire, what to hire them for. How can I trust them to stick with me through the growth of my business? Because to grow and scale a small business means that you're replicating some sort of system, process, workflow. There's some structure there that you can place somebody in to perform this role so that you can release yourself from that particular role and do more CEO stuff in your business. This requires this value called self-awareness. If you haven't listened to episode 1, this is where I covered the 9 values of the Hello Taxman and Unicorn Emprise brands. So if you would like to learn more about them, please go back and listen to episode number 1, because it is those values that this podcast is being built on. And for us to become unicorns, even in our 0 to 1 million Kina range, I believe these are the principles that can take us at that foundational level and all the way through to the bigger, higher revenue ranges. In the Mad Unicorn series on Netflix, it showed the typical reasons why each of the CEO, COO, and CFO had trust issues. It showed both sides of the story. Like, yeah, there was some friction, but there were reasons for the friction. Even for the villains in the show, it showed why they were evil. Not that it was justified or whatever. I'm not trying to get into that part of the debate. I'm just saying they showed both sides of the story. In business and as leaders, it's always important to have that open mind to say, okay, there's two sides to this story, and I may be wrong, but I am self-aware enough to recognize my patterns, and I have self-respect, and I can lead myself through these challenges in my business to be able to lead more people according to our business mission, vision, and values. And now, as we end this episode, let's just recap on those 5 financial management principles from the Mad Unicorn Netflix series. Number 1, they had a CFO, so they had business structure. Number 2, the CFO reminded them of the need for financial clarity. Number 3, the CFO kept her personal life out of the business operations, so there was financial clarity in the business operations. Number 4, they had emergency savings. And lastly, the CFO was the most trusted person on the team at the end of the day. This comes back to us as an individual owner. Are we building ourselves up to be the most trusted person to lead our business to reach and maintain its business vision, mission, and obtain its goals? All right, One Talk, and that's all for now. I'm Vanessa Geita, and I hope you join me again next time on the Unicorn Emprise podcast.